Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla. There's a lot to go over. There's a lot to discuss. There's a lot of potentially good stuff here. So I don't want to jinx or anything, but let's just talk about it. Let's just dive right into it. If you enjoy, don't forget to hit that like button as it does help a lot. This is not financial advice. I am not a financial advisor. And of course, my membership section on YouTube is live. The link is down below. For just $2.99 a month, you can access all my thoughts, ideas, etc. on stocks. And today I added one for Apple. I did a bit of a PayPal one here, but I did an Apple a little bit here somewhere as well. So all in all, if you're interested, link is down below, just $3 a month. But with that being said, let's just jump right into it. Let's talk about it because there's a lot to talk about. So Tesla closing the day once again, of course, unfortunately down about 2% on the day compared to the market. Maybe slight underperformance, but nothing substantial, at least compared to before. But with that being said, there's a lot to talk about. Anyway, let's just jump. Okay, my mind is just, I've been staring at charts a little too long, honestly, I feel like. But so let's get the bad news out of the way first, because there's a lot more, like, I guess, potentially good news I want to talk about, but let's just get the bad news out of the way first. Let's get the potential bearish thesis, if you will, bad stuff out of the way. Anyway, so let's talk about this. First and foremost, well, we did finally go down below the 200-day moving or 200 moving average on the weekly. Obviously, there's still 2 more days on the week. The candle is not finished. And that's important. And that's an important thing to consider with what I'll say after this. But the candle has not closed. There's still 2 more days. But as it stands right this absolute exact moment on the weekly, it is, of course, looking a little bit questionable, right? Closing below not closing, so far below the 200 moving average, below the trend line as well. Looking a little bit suspicious, right? It's definitely looking like it wants to shake out some people. But like I said, there's still 2 more days. And this to me right here is probably the most bearish thing you can think of, right? The squeeze indicator is still showing red circles. So that hasn't picked a direction. Thank goodness, because if it did, that could have been bad on this down trend here so far. It hasn't. That's good. But all in all, again, looking a little bit suspicious here, right? You definitely, as a bull at least, you absolutely want Tesla to close pretty much above 218 roughly, I would say, give or take, pretty much above the 200-day moving average, which is 218.5, we'll just say, to make it simple, right? 218.5 is where it's at. You definitely want to be closing pretty much right at it, if not above it, ideally. That's number one. But that to me is probably the most bearish thing here you can think of, right? And it's pretty bad. Like, it's not like that's all there is. This is pretty bad. Like, if we don't manage to find a close essentially above 218 to 218.5 this week, essentially by end of Friday, it could be bad. Could be bad. That is a bit of a warning shot that the downtrend may have just started, really. So take that into account, right? But let's talk about what could be the good news. And there's, in my opinion, a lot to talk about here because Tesla is doing some pretty interesting things here. So let's go to the daily first and very quickly. So obviously let's just get the obvious ones out of the way that we've been talking about for quite a while. RSI, oversold. And today, of course, it got, well, even more oversold. Obviously, every time it's reached these kind of levels or even lower, it's bounced pretty much every single time with a pretty substantial bounce. There's still technically more room to the downside, but, doesn't have to go all the way down to these levels to bounce, but it can. But point I'm trying to make is it's oversold. Stochastic, let's bring that up. Where is the stochastic? Should be down here somewhere. Same concept, pretty much oversold, but it looks like the blue is finally trying to cross the red. Pretty potential, good sign there. I'd like to see that. So those are like the super obvious ones, right? We obviously, the MACD has essentially played out as bearishness here, right? How much more bearish can it really get, honestly, right? Without at least some bounce. And then where is the pivot? The pivot actually was weird. Like, it had the signal, then kind of reset. I'm not really sure what happened there. I haven't used this indicator enough to really understand why it, did that. But, take that for what it's worth. We're still hugging the red line of the Bollinger Bands, right? Obviously, as I always say, more often than not, it reverts back to the mean, which is pretty much sitting at the very low 240s. Doesn't mean it has to happen tomorrow. But more often than not, every time we've been hugging the red line, it's always reverted back to the mean. At some point or another, it's not a matter of if, it's just a matter of when. But obviously, potentially more downside ahead, right? That's always a possibility. But with what I'll say very soon, I think that might not be the case. I think we potentially have found a bottom here. I'm just kind of getting the the housekeeping out of the way first before we really dive into the meaty, juicy information. But that's really the main stuff, right? Now let's dive into what I believe to be the meaty and the juicy information. Let's go back to the weekly very quickly. There's one thing I specifically want to mention on the weekly. So just before the close today, the weekly candle was red, right? It was red just before today's closure, and we ended up essentially pumping towards the end of the day. Now, the one thing that's interesting to note is the fact that so far, prior to this week, these 4 weekly candles right here, 1, 2, 3, 4, are all red. I'm sure you can notice that. And again, like I said, prior to the last 15 minutes of the day, this one was also red. But if you look back and if you zoom out and you look back for the past 3 years in Tesla's history of trading, there has never been more than 4 red weekly candles in a row. Or in other words, there hasn't been 5 in a row. The last time there were 5 weekly candles in a row was all the way back here. 1, 2, 3, 4, 5. This is like what, 1, 2, 3, 4, 5, 6. This is like 7. This was obviously a lot more. Back in February of 2019, and I checked it. Maybe I missed something, but as far as I'm aware, there has not been more than 4. This right here is 4. Here's 3. Here's 4. If we could go up here, right? There's like 1, 2, 3 here. 1, 2 here. 1, 2, 3, right? This might be the closest one, but 1, 2, 3, 4. 1, 2, 3. It's never been more than 4. Right? It's always had some break. 1, 2, 3, 4. 1, 2, 3. Never has it been 5. And we already have had our 4. And now we're potentially going to be printing a white weekly candle, or I guess in this case, white, green, whatever. Again, the point I'm trying to make is it's never been 5 or higher in a row other than way back in 2019 in February. Take that in for what it's worth. That's number 1, right? That's kind of what I want to say about the weekly. Let's go over to the daily. A few very important things. Like I said, we did still technically break down, but again, one candle is not a trend, right? This can be a false breakdown. And the thing I want to bring up very quickly is that there's been a lot of false breakouts and downs throughout the market. For instance, Tesla had a false breakout up here. Broke out, came back, retested. Unfortunately, it wasn't a successful retest. It broke right back down into it. Obviously, that's not great. And that happened a lot. Netflix, I've said many times, false breakdown, rocketed back up. Disney, false breakout. Like a lot, the amount of people I saw posting bullishness on this candle breaking out, and it did look bullish, just to pretty much give back almost all of those gains and come back in. There you go, a false breakout. On the flip side, PayPal, pretty nice false breakdown. Same concept, right? Broke down below the VWAP, pretty much came right back up and back into the channel. The amount of false breakouts and breakdowns I'm seeing lately in the market is pretty ridiculous. Like I don't know what the hell is happening with this market, but it's pretty substantial. Who's to say that Tesla isn't about to do the same? We'll see. Now, so that's one of the things I want to say right there. Now, one thing that's interesting that I want to mention very quickly is going to be the options flow. This is not something I usually bring up very early, but this is pretty important. So we have a lot of, smaller flows here, but the main one I like to look at obviously are whales. This one right here, as you can see, 3.9 million in premium, 212.5 puts, expiring 26th of January, or in other words, next Friday. And you might be looking at this initially and thinking, wow, well, that looks pretty bearish, right? That looks pretty darn bearish. But remember how I said I wasn't sure if this chart is able to distinguish between a bullish and a bearish put. In other words, if you're buying this put, it's obviously bearish. However, if you're selling this put, essentially doing a sell to open, you're doing essentially what's called a cash secured put. I mean, for all I know, the whale could be doing a naked one, who knows? But the point is, it's usually a cash secured put more often than not, unless you're obviously a massive whale that really know what you're doing. But the point is the fact that this actually happened to be that. This right here is going to be this exact put right here, 4 million, this has 3.9, whatever, same thing, but the exact same strikes, exact same date, etc. put, but volume greater than open interest, so it's being sold to open. In other words, it's a bullish position. Now, there's a difference between this. I had to just explain this quickly to my members in case people weren't aware. It is bullish. Don't get me wrong. It is absolutely bullish. And essentially, they're saying that they don't think Tesla will close below 212.5 post earnings and post really that Friday, unless they of course close it maybe on a rally soon. Who knows? It's possible as well. But the point I'm trying to make is the fact that it is bullish. Now, the thing with this though is that Tesla can technically just go sideways between 212.5 and let's say maybe 218, 218, 19, whatever. It can just pretty much zigzag and do nothing and just go sideways the whole time, and they still win. So just keep that in mind. This doesn't mean it has to completely and utterly rocket back up to like 240 or something like that. It's a sold put. Pretty much all they're saying is that I don't think it'll go below 212.5. And as long as it doesn't do that, I don't really care what it does. It can go sideways. It can do nothing. It can rocket. Really doesn't matter. But as long as it's above that strike by that date, that premium is all mine, baby. So just keep that in mind. It doesn't mean that it has to literally just rocket up and that's it. It's going to 240 next. It could. It absolutely could. And they would win on this a lot sooner. But just keep that in mind. Just figured I'd mention that. But nonetheless, it is still extremely bullish and it's a massive whale. 4 million is a substantial amount. So that's going to be another potential bullish catalyst for Tesla. The next thing I want to talk about is going to be this. The daily candle. Beautiful daily candle. This to me, one of my personal favorite things to look for in reversals are divergences. I love divergences. That's one of my favorites. But I also love hammer candles, daily hammer candles. Whether they're bullish, like this one, or bearish, like this one on the weekly that we had, right? This you can see right here, this weekly bearish candle, a bearish version of the hammer candle. Well, look what happened after that. Bearish weekly hammer candle, massive sell-off. I wish I paid attention to this. I don't know why I didn't. Sometimes I really look back and I think, man, what in the hell was I thinking? But nonetheless, the point I'm trying to make, this is the bearish variance. On the daily, we just printed a daily bullish variance, right? I'm sure you can see the difference. And the best part is the fact that it ended pretty much at the highs of the day, which is beautiful. Like I always say, you want to see as little of a wick at the top as possible. Ideally, pretty much none, which is what we're seeing here. Beautiful. You want the actual candle thickness itself to be substantially smaller than the wick down below. You want a long wick, which we have, and the candle's thickness to be, at the very least, you want to be able to fit at least like 2, maybe 3 of them within that wick. So if you were to like copy, paste, replicate it, here we can fit like 4 or 5. Beautiful looking hammer candle. One of the most, if you were to look it up in a textbook right now on trading, what is a hammer candle? You can easily put this in there. Absolutely. And on top of that, it closed in the green, which is even better. It's not a red. Remember how before I used to say we see some hammer candles, but they're red. So it's like, it's good, but it's not ideal. This is green. Ideal. This is exactly the kind of hammer candle I want to be seeing in a downtrend, which is obviously, I think we can agree, what we are in. Beautiful looking hammer candle. Pretty much, you can argue it's an inside day. Not really. I did go slightly below yesterday's low, so it's not technically an inside day, but it was only by like the smallest amount possible. Whatever, we don't care about that. We see the hammer candle. But the point is the fact that we still found pretty much a bottom at pretty much the exact same level 2 days in a row. That, 212.5-ish level. 2 days in a row now with a pretty respectable bounce. Pretty much going red to green. Well, in this case, the candles, we still closed red, but the candle itself went higher than, or it closed higher than the open, which is good. And more interestingly enough, the left shoulder and the right shoulder are pretty much finding the bounce at almost the exact same level, almost to the T. Like, it's absolutely gorgeous, right? You really can't ask for a better looking inverted head and shoulders than this. So the point I'm trying to make is the fact that Tesla has quite a lot of things to work with to bottom out here. We need follow through tomorrow. That's the most important part. Do we get follow through tomorrow, or is there another annoying catalyst that appears overnight, like maybe more price cuts that just sends us down even further? Always a possibility. That is always the risk. Of course, hammer candles aren't guaranteed. You want follow through, but if we get it, beautiful. And if we get the follow through, and if we do get this rally today or tomorrow and potentially even Friday, this will also potentially give us enough time to recover back into this channel and ideally above the 200 moving average, which from here isn't that much farther ahead. It's what? Another 1.5% max? Nothing for Tesla, right? That's nothing. You do that intraday easily. So just keep that in mind. The point I'm trying to make though, overall, is the fact that Tesla, if there's any time for it to bounce, for it to finally find some life, this, in my opinion, should be it. Doesn't mean it has to be. Like I said, we need follow through tomorrow, but this seems like there's a lot of things lining up pretty darn, almost too well, honestly. Beautiful bottom at the same level as yesterday, same level as the left shoulder, printing the right shoulder at almost the exact same level. We're oversold on many, many conditions. We've been selling off substantially without really any life in between. We've never had 5 weekly candles in a row on Tesla other than way back in 2019 of February, years and years ago. Hasn't happened and hasn't occurred since. We have a whale betting that 212.5 is pretty much going to be the bottom. We have a hammer candle setting up beautifully. I don't know. It's looking like it wants to reverse. If Tesla cannot find a reversal with all of these conditions right now, yikes, man. That would be very, very disappointing. Like it really feels like it's primed. I couldn't ask for a better setup for a potential reversal. I really couldn't have. I did re-enter my shares. I bought back my cash secured puts on for profit that I sold for the week at pretty much 213. Bought those back, rebought my shares at 214.5, and now I'm sitting and I'm waiting, and this to me looks primed. Like I really could not ask for a better looking situation to get at least some form of reversal. If we get confirmation tomorrow, we'll talk about where potentially we can go to, but looking good. And I really do like the way this looks. QQQ also has a beautiful looking hammer candle off this potential, little bit of a drop since as well. Not as much of a Tesla drop, but look at the flow on QQQ. Pretty bullish, man. I mean, some bearishness, but in my opinion, more bullishness than bearishness. So anyway, long video. I don't want to make it much longer than this, but the point I'm trying to make, it looks like this looks like the bottom. It really does. We need fall through tomorrow. Naturally, everything's a risk. There's always a risk associated with all these things, but yeah, this looks like this has to be at least temporary, at least a short-term bottom, minimum. Regardless though, that's it for the video. Ladies and gentlemen, let me know what you think down below. I'm hopeful. I really am. I think this is looking good, I really want to see what tomorrow brings. And if tomorrow is a green day and ideally even a gap up, it's looking good. It's looking good, man. It really is. And I think at the very least, it's a short-term bottom, if not potentially a bottom. We'll see. But with that being said, thanks for watching. And as usual, I'll see you tomorrow. Peace.